What's up, traders, and welcome back to M.I.C Forex training. Welcome back to M.I.C Forex training. I believe you guys are doing good. You are finding our videos very educative, very interactive, especially with our model of training that we have to give the subject, give some small discussion about the subject, give some illustration, then we go to the real market for examples. We go to the real market to give real market examples. So today I come back with another very interesting and important video, and this one is about how you can read a market structure. And simply I want to take you through reading and deriving the market structure, reading or derivation of just market structure. So before we begin, if you're finding our videos very good, you need to subscribe to this channel, follow for more. You can also contact us through our website, that is MICFOREX.co.ke. You find our numbers there, our handles are there. You can also find us on TikTok and also in the Instagram. So this is Euro CAD. You can see this is Euro CAD, but I'm just going to move the chart away first so that we can have our class here. So I want us to talk about derivation of market structure. Some people call it market trend. It's simply the same. I want to give some very interesting discussion here, and you guys, know that apart from being a forex trader, personally I'm an economist by training. I'm an economist and statistics by training, so I really understand the markets and I really understand the financial concept. But that is not to say that if your discipline is not in finance, then you are not like you don't know what you're doing. No, that is not to say so. So in real market structure, you must have heard of some concept in business or in a real trade setup. That is what you call the monopoly, the monopolistic, oligopoly, all that kind of stuff. And in many cases they will give you or they appear in a graph. Such that you'll be able to know the characteristic of every market structure setup. But in forex we do not have the monopolies. Sorry for that. We do not have the monopoly, the monopolistic, or that kind of setup. What we have is just price. This price moves in a certain pattern like this. The price moves in a certain pattern. One thing that you guys need to understand and know from this day, especially from the training that we are doing here online or on YouTube, is to understand that price does not move in a straight line. Price will never move in a straight line. It always moves in up and down. Yesterday, or the previous video, I think I'm fond of saying yesterday because I'm recording these videos every day, so you guys will pardon me for that. So we have already said in our previous videos that there are some terminologies that I needed to clear for you before I even talk about the market structure. Let me tell you that we have three types of market structures. Let me just begin there. Three types of market structures. So number one, just to say three types of market structure. To write this like that. Market structure. Number one is a uptrend. Actually, I had even told you that you can even call them market trend. I'm going to be showing you the difference between a structure and a pattern, the direction and movement in price. So stay with me. It is not going to be a long video. So we have uptrend. Uptrend market is also called bullish. So if I tell you that this particular market structure is bullish, I mean that that market is uptrend. In other words, it is going up, it is buying. These are buying market setup. When I say buying, I don't mean that there are no sellers, but generally, in the long run, you'll see that the price is really bullish. However, we have some scenarios whereby the price still moves down, but they are being overpowered. There are so many, the direction in the market is uptrend. Are you understanding? Uptrend. So that is number one. Number two, we have downtrend market. Downtrend. Of course, is the opposite of uptrend, and this one we also call it bearish market, and this is a selling price setup. This is a selling market. And lastly, we have one that is not very useful, especially when you want to take trades. This one is what we call consolidation or ranging market. I think the correct word should be ranging market structure, ranging market, or you can just say that the market is consolidation. Let me just call it consolidation. And so for the downtrend, the market moves this way. For the downtrend, the market moves that way. And for ranging market, we have something like this. And characteristic of these, I'm going to be giving one by one, starting with uptrend. So I'm going to be discussing each one of these. Ranging market looks like that. Ranging market looks like this. So let's start one by one. And I want to take you, you don't need to write notes. I'm going to be giving you all the notes that you require. So you don't need to write any notes. Now, for those who are starting, for those who are interested into starting forex, remember you need a very good broker. Broker is going to be the link between you and the platform that you can access the market through. And you guys, I can welcome you to PUPrime. PUPrime is a global regulated broker whereby you have very competitive spreads. You can open account there. Just to open account is very easy. Just go to my videos, look at the comments. I usually comment the first comment. You can find my website there. Go to my website and open your account with the PUPrime. They have first ever verification mode. You can also have very good customer service, and their withdrawals and deposit are instant. And they are acceptable across the world. So you can open account from wherever you are. Only those people who are in let me say that was going to be a joke. Now, consider a market that is moving in this manner. So first of all, let's start with number one, uptrend. Let me derive for you what we call uptrend or just bullish market. So here we have to say let me give or bullish, and we have to say here, point number one is that it is characterized writing these things, characterized by series of higher highs and higher lows. But people will never really show you how they derive this. So why do we call it bullish? Number two, however, we have instances of short, I have to use that word, short downtrends. In the overall, the direction is upward. is upward. I told you I'm going to be training you Forex like just a class 1 student so that you can understand. We are saying the market is moving in this manner. Up, small down, much up, small down, much up, like that. I'm using such a simple English so that you can be able to understand. I know we are being watched all over the world, and not very many people will be interested into good English. You just need to communicate, just need to have communication. So a market that is moving in the direction, you can see that actually the reaction points are marked as high and low. That one is very important to note. The price reaction points, price reaction areas or points are labeled labeled as high and low. High and low. And this is what I mean. They are labeled as high and low. So the market starts from this point and we have a low there. Are we together? We have a low at that point. Let me change this color maybe to red. Yes. The market comes and reacts from above here, and we have our H to mean high. We have our high there. Let's start there. Are we together? If you are together up to this moment, you've not gone away, click on the subscription bell, subscribe, that button, click on the notification. I want to see traffic. Because by the end of this Forex training, you guys will not need another mentor. You'll be sorted. You'll be good to go. So we have our low and our high here. Again, remember also that the price moves from the price moves from left to right. This is the price movement. So we had this one printing fast, then this one like this. That because the price moves from this point going this way. So now, if this is our initial low, we can call it low 0. But for the purposes of Forex terms, we just call it low. So next, now you are going to see price dropping. Let me pick my path. Where is my path? It's here. You see the price after reacting from this high, it's now moving down. But at this point, it does not come to this low. It returns from relatively higher price. So how do we label this reaction point? Yes, it is a low. It's a low. But looking at it now, because we are talking in terms of prices, you compare that price and you compare this price. So look at this. This is 1.61795. This is 1.6193, meaning these are higher price than this. So in that view, you will understand that why we call this one higher low. It's a low that is higher than the previous one. That is why I'm naming this video derivation of market structure. Many people will not teach you this. I'm not saying that they don't know, but it takes one to be an M.I.C. like me. M.I.C. Remember, M.I.C. means money in candles. So I just look at candles and you're able to make sense out of it. Isn't that interesting? Now go with me. So we have higher low here. The price climbs up, does not return from this particular high. So we have that initial high and we have another new high at that point. If you look at this high in terms of price, this one is at this point, but the new high is higher. And that is why we call the new high higher high. I come from a community whereby we don't pronounce H, so don't feel anything for me. Actually, my language does not have letter H, but I'm here for for the sake of the class, for the sake of everybody who is watching this one. So we have high. Next, of course, this low is higher than this. We call this one higher low. That is why you hear people singing, higher highs and higher low. But if you ask them exactly what are you meaning, can you derive what is a higher high and higher low? Seriously, unless they have come to watch M.I.C this video like you are doing, then they will have problem in understanding what we call higher highs and higher lows. Higher highs and higher lows. All right, are we together up to that moment? Now, this is a market structure that is uptrend, because we have said whenever you are able to find, because you said it is characterized by series of higher highs and higher lows. Whenever you find higher highs and higher lows, then without doubt that one is a market structure that is uptrend. That is an uptrend market structure. That one is an uptrend market structure. And we say, however, we have instances of short downtrends. In the overall, in the overall, the direction is upward. So we said, we are having this one, then this one, then the market continues up. The market continues up. So the move, of course, that is going to come under a very deeper concept when we'll be talking about the order blocks later in a future video. So you have to stay following this one every day. So you are saying that this movement that is aligning with the movement that aligns with the overall market direction, it's called impulse movement or impulsive movement. And that is where traders will target, because we want always to trade with the general trend. We have to trade with the general trend. I think I need to give you that one. This one is NB. This one is not about uptrend or downtrend. This one is for general market structure. So NB, I think I need to give it in red. So no problem. Let me just give it the way it is. NB. Let's talk about some very serious concept here. NB. The price, the movement in price. The movement in price, that aligns with the general trend. The general trend is called impulsive movement. Impulsive movement, or just impulse. Passive movement. You can also call it positive price movement. You can also call it general. You can also call it general trend, although I have already indicated it here. So that is the general trend. The general trend. So let me cut it so that it doesn't, yes, like that. So the B of this is to say the price movement, or the movement in price, the price movement that goes against, against the general trend. The general trend is called, here we have two names here. It's called, you can call it retracement. That is in uptrend. Or pullback in downtrend. I see people, confusing this, but thank God for you not have problem. Or pullback in downtrend. I think this video is going to solve a lot of problem. So in a bullish market, we'll call it a retracement, and in downtrend we call it pullback, or generally correction. You can just call it correction. This one doesn't matter whether it's in bullish or bearish. You can just call it correction or negative trend. All this is to make sure that you have no problem determining and explaining market structure. So remember, we are here to understand the trading. I need to give another small subtopic here. I need to give small subtopic here and call it or I just continue with this, but I wanted to change the color, so let me pick a new excerpt and say always trade with the trend. Some people say, trend is your friend. That phrase is being used everywhere. Always trade in line. I think that will be a better communication. Trade in line. No, let me pick a good English here. Always trade in the direction of the general trend or the superior trend. The general trend. That is to say, if the market is bullish, only wait for buying opportunities. Don't chase the market. Only wait for buying opportunities. So in the next video, immediately after this, I'll be showing you how to pick these trades. That is to use support and resistance, because I understand it quite properly. I'll be giving you a very easy strategy. So if you find a market that is bullish, you want to pick trades here. You want to pick a trade at that point. You pick trade at that point. Why? Because the market is moving in a bullish momentum. So don't, however you have this correction here, but not until you are someone like M.I.C, then avoid jumping into trades with a negative trend. How to get up to that moment? Good. So we are doing good. So that is to say we used to call it in our school IE. I really don't know this initial stand for what, but that is to say buy in a bullish, buy in uptrend, and look for sales in downtrend markets. Look for sales in downtrend markets. I think that one is very clear. Doesn't need any more clarification. So that one is, up to here we were talking about the bullish markets, but somehow I jumped into deeper understanding of market structure, and this one now is explaining the movement in price in alignment with the trend that is going to be impulsive, whether in bullish or bearish. But when we have correction, it's called retracement. The market is retracing to pick more orders so that it can continue upward. But in downtrend, we say that the price is pulling back. That is pure Forex language. The price is pulling back. So when you attend M.I.C classes, you don't just confuse these two very important concepts. Now let's look at I want to have all this on my table, on my board, sorry. So let's now talk about the downtrend, or let's try to derive a bearish market. So number two here is bearish market. Let me start with downtrend. This one is very superior. Downtrend or bearish, or just selling market. Let me change this color to black. Now, look at this. As we did here, let's start here. This is our law. This is our law. If you look at this, it is low because the price is moving upward. So where it's going to react next is our high, is our H1 or is our H0 or H initial. Are we together? But the price continues to print down. So if this was our first low, that was our initial low, but you can see another new low which is relatively lower than the previous low, and that is why we call this one lower low. It's a low, yes, but it is lower. It's a low that is lower, all right, than the previous one, so we call it a lower low. We call it a lower low. Okay, then next the price goes up to print this particular high here, and you can see, yes, we have this initial high and we have this our high beginning from this particular pullback here. I think I can use that word now because I've already derived it for you, but it is a lower high than this one, and that is why we call this one lower high. Lower high. So characteristic number one that I have to give you here, point number one, it is to understand that it is characterized, it is characterized by series. When I say series, it must be from 2 and above. I'm going to be showing you that you cannot identify a trend of just two reaction points. It has to be 2 and above, 2, 3, like that. So series of lower lows and lower highs and lower highs, like that. Series of lower lows and lower highs. I think all the other stories here is just the same. You just have to to understand that when the market is is moving in the direction of the general trend, I mean when the market within this movement and this one, because they align with the superior trend, then we call this one impulsive movement, and from this point to this point we call it pullback or just correction or just negative trend or just negative trend. So that one is our lower low, and then lastly we have lower high, like that. This one is a bearish market. Last but not the least, on this particular video, I want to take you through another very easy concept, and this one is our third market structure and is called ranging market. When you talk about a range, this is to mean it doesn't have clear highs and clear lows. In other words, it is characterized by equal highs and equal lows. I think I have to make mine look really equal. We have equal highs and equal lows. Equal highs and equal lows. Equal highs and equal lows, like that. Do I need to write that for you? Yes, let me write. So number 3 here we have ranging market structure. I'm beginning to hear some noise, so I'm just doing it quickly so that we can stop this. So it is characterized by okay, let me just call it no clear high and lows, so we call it equal highs. Sorry, this one should be highs and equal lows. You can see this one, there's no clear high or low, so it is characterized by equal highs and equal lows. Another point here we need to say, actually let me enlarge this one. Yes, I think now we're having some a bigger board. You can see everything. So the point here is to say NB, avoid taking trades, avoid trading here. Where I'm talking about avoid trading during the ranging market. So there's not much stories here. Just avoid trading there. Avoid trading there. So that is the derivation and reading of a market structure. We have three market structures or types of market structures: bearish market, uptrend market, that is a bullish one, and the ranging market. Of more concern is to understand how to take the trades, and that's where we are moving from the next video. So stay tuned, guys. I think today we've already covered a very significant and very important concept of deriving and reading and understanding of market structures, a derivation of market structures, because people just, meta just teach it, but they will never show you in the real market. They will never show you in the real market. So let's look at a few examples, then we can call it a day. Let's look at a few examples, then we can we can call it a day. I'm just adding my watermark. This is a Euro CAD on 1 hour time frame. Let's try to identify a clear market trend, a clear market trend. Yeah, what's wrong with this? Let's look at this. If you start your path here, you see this is let me change this color first. Red. You see this one, if we start here, this one is our first high. You see this high is higher than this one, like that. This low is higher than this. So these are series of higher highs and higher lows, higher highs and higher lows. So you can say confidently this one is a bullish market. This one is a bullish or an uptrend market, and you can connect all those all these aggregation points like that. This one is a bearish market. This one is a bearish market. Now let me give you another example in bearish. So that we can end the video. Let me use this part, and you can see starting from this top, then this one is our first high, then low. I did not pick the path, sorry. Let me pick the path. Yes, like that. This one is our first high, our first low. What we are seeing next is a lower high. What you are seeing next here is lower low. Almost the same, but it goes on to break this low. For me, actually this one is even lower than this, so that one is very correct. You can see like that, and that is the end of this particular bearish movement. So this one is a bearish market. So thank you very much, guys, for watching. Thank you very much for those who are who are subscribed to this YouTube channel. If you are new here, please do that. If you're watching here and you can see that the numbers are not coming so quick, you can share this link, share to your people, share to the people that you want to hear. Let very many people learn. Very soon we are going to be getting videos that are deeper, so you have to go with me. You have to follow exactly what I'm training. So the next video will be talking about now support and resistance. We'll be talking about support and very interesting concept into trading. I'll take you through all those patterns. I'll give you some indicators, so by the time we are done with the price action, you guys, you'll really be having a very good a concept to trade. Thank you very much, guys, for watching me. I have to finish by telling you, visit my website MICFOREX.co.ke. Look at our services, look at what we are doing, look at testimonials, and also if you want copy trading, you want to be able to the signals, you want one-on-one training, we can also do that. You can also get me through my TikTok. When you go to my TikTok, my number is there. You can always find me for one-on-one meeting. Thank you very much, guys, for watching me. My name is M.I.C.